the heartbeat of business. I'm your host, Michael Brette, and we've got a very exciting show here today. I'm going to be talking about cannabis, how to raise capital as a cannabis company. I'm going to be talking about valuations and why a valuation is so important when you're raising capital. Or valuations are important if you're doing mergers and acquisitions for estate planning purposes, to buy, to sell a business. But for today's purposes, we're going to be talking about valuation and why it's important and why you should care about it. A lot of people just pull figures out of the air when it comes to valuing their business. Now, we're not talking about an appraisal. We're talking about a valuation so that you, as a business owner, understand how much of the equity of your business you're going to be giving away to a potential investor. We're going to be talking about the percentage and, again, the formula. And, again, I got to caution everybody, math has never been one of my strong suits, so I'm not going to bore everybody with a lot of mathematical equations, but I am going to discuss how you establish a pre-money valuation and a post-money valuation, and, again, why those are important. There's a lot of money out there for cannabis businesses. Again, whether you're trying to start a dispensary, whether it's a grow facility, whether you're in the distribution business, there's a lot of capital out there. You just have to figure out how to access it. Now, you have to be very careful. There are security laws that you need to abide by when you're raising capital. I don't care if it's for cannabis, technology, or what happens to be. You just can't, print something up like a business plan and go out and start soliciting money. You have to comply with security laws. And again, we're going to cover that in this segment of the show. This show is going to be focusing on the cannabis and valuations, but the takeaway from the show can be raising capital for any business and valuations for any business. But today we're going to focus in on the cannabis sector. I'm going to give you some figures here. There are about 25 million privately held companies out there in America, small businesses, medium-sized businesses, and about 8% of the businesses, or 2 million, fail each year. And the reason they fail, it's not so much that the business model is flawed. It's really that they're undercapitalized when they start the business, or midway through developing the business, they run out of money. Now, forget about banks. Banks don't loan money to anybody. They make real estate loans. That's about it. So if you go to your local bank and you want to get a business loan, they're going to ask you for all kinds of collateral from real estate in order to make a business loan to you. So forget about banks. And you don't need to go through all that credit and qualifying and posting collateral if you go through the process that I'm going to be covering in the show, which is equity financing, using 506C as a private placement, doing equity crowdfunding, or Regulation A funding. You're going to be selling equity. Now, you can sell debt or equity under the rules we're going to be talking about here today. But again, forget about bank financing. So what I talked about earlier is 25 million companies in America. About 2 million are going to fail each year because they're undercapitalized. They just don't know how to go out and raise money. Most people try to use friends and family, but that's very limited. Most companies can raise maybe $100,000, $200,000 from friends and family, and then they exhaust those possibilities. So you need to broaden your circle of potential investors, and that's what we're going to be talking about here with the cannabis capital. There are so many different avenues out there. Now, equity crowdfunding was part of the Jobs Act in 2012. Equity crowdfunding allows you to put together a prospectus on Form C, which you can get from the SEC or have your securities lawyer prepare for you. And again, it's like a prospectus. So once you have the Form C put together, and your legal fees for something like that are going to be in the area of $10,000 to $12,000, $15,000 for legal fees, and you can't sidestep that. I don't know how many times I get phone calls from people and they say, I don't want to pay any money. Well, there's no such thing as a free lunch. And that's the same thing with raising capital. You're going to have to pay a securities lawyer to put together the Form C in order to become effective. And then you're going to have to pay a fee to get on a crowdfunding website where you're going to post it. Now, once you've done all that, you've got to market it. Without marketing, you're going to fail. Now, why is marketing so important? Well, it brings investors to your deal. You upload your documents to the funding platform, and then you market through YouTube or through emails, social media, conferences, events, to direct them to the funding platform to raise capital. That's one aspect of raising capital. That works for cannabis or any other business. But, when you do that, and then you can go to the next stage, which is a 506c private placement, which you can raise unlimited amount of money. But there are rules and regulations you need to follow. Now, we're not giving out legal advice on this show at all, even though I have my doctorate degree in law for 40 years, and I've been in business for almost 30 years, taking companies public, raising capital, structuring deals. We're giving you generalized information. You need to consult with your own SEC attorney when it comes to putting together the correct offering documents and the correct steps to raise money. Now, once you've decided on which one of those avenues that you're going to do, equity crowdfunding or a 506c private placement, it's very important that you establish a valuation. When you're going out and talking to investors, a lot of them, will say, and this is an example that happened to me a couple of months ago. Somebody approached me and said, we're trying to raise $1 million, and we'll give you 10% of the company for $1 million. And I looked at him and I said, wait a minute, you're telling me your company's worth $10 million? Because that's how you get a valuation. It's what the investment is and the percentage. So they're trying to tell me a startup with no revenue, no products, no market share, and a lot of other negatives is worth $10 million. And I asked him, where'd you come up with that figure that you're going to give 10% of your company away for $1 million? They had no answer. They were just, they wanted the money and they were just picking numbers out of the air. So it's very important that you have a pre-money valuation and a post-money valuation. Now, the words are not that complicated. Pre-money valuation means what's the value of your company before an investor puts money in. A post-money valuation is what's your company worth after the investor puts money in. So, and again, there's a formula for figuring that out, and then that determines what kind of percentage you're going to give to investors. Now, I have a giveaway on this show also. I have a white paper that talks about the formula for establishing a pre-money valuation, a post-money valuation, and what percentage of the company you give to an investor for X number of dollars. So if you want to email me when the show is over, Mike Brette at gmail.com. That's Mike Brette, BRETTE, at gmail.com. I'll email you the valuation information that we're covering so you can see exactly what the formula is for establishing the value of your company. And I can't emphasize that enough. When I talk to people that are looking for money, looking to raise capital, and I mention valuation, it's like, look, we don't have time for that. We're trying to get a widget going, a gadget. We're trying to do cannabis, open a dispensary, grow facility. We don't have time for mathematical formulas and valuations. They just don't understand how important it is. And usually the money you're raising initially is the most expensive money if you don't do your valuation, because you'll end up giving too much of the company away. And then when you have to do a Series A, a Series B, a Series C round of financing, as the founder, you're diluting your equity ownership stake because you didn't establish a correct valuation. That's why it's important, and that's why we're covering it here on the show. You're listening to Business Pulse Talk Radio. I'm your host, Michael Brette. Business Talk Radio, Business Pulse Talk Radio, the heartbeat of business. You're going to learn everything you need to know on this show and the other shows that we have here every Tuesday at 10 o'clock on OC Talk Radio, because we're going to be talking about business and only business. We're going to talk about how to start a business, grow a business, take your company public, exit strategy, valuation, how to find investors, everything you need to know about growing your business and taking your business to a new level. That's what Business Pulse Talk Radio is all about. Now, I also have information on raising capital, again, whether it's cannabis or hemp or whatever. But I do have, and I'll send this also to you if you email me, again, mikebret@gmail.com. We have, through one of our investment sources, up to $5 million available for cannabis and hemp. And that can be, again, for a dispensary, it can be for a grow facility, it can be for extraction. But you need to have, there are certain requirements. You have to have at least $500,000 a year in revenue. Can't be a startup. You have to have strong management, proprietary products, and then an exit strategy. Now, what do I mean by an exit strategy? In my business, in the investment banking business, we call exit strategy either taking your company public or a sellout. Somebody's going to buy you out at some point in time so the investors can get their money back. So if you email me, I can give you the valuation information, and I can give you the information on the $5 million investment capital, which is either debt or equity. I prefer equity. Now, why? Debt means you have to pay an interest rate. Equity means you're giving up an ownership interest in the business, but you don't have to pay a monthly or quarterly payment to the investors. They get the equity, and that's what they get. If you go the debt route, you got to, and if you don't have a lot of cash flow, every month or every quarter, that interest payment is due, and you don't want to default on that. So, but we do have debt and equity financing through this one investment group that I've been working with. And I've taken a number of companies public in Canada as well as here in the U.S. that are in the cannabis business, and we've arranged capital for them through some of the techniques I've been talking about here on the show. I know it's, on the federal level, everybody is a little confused and concerned that, there's not a clear and decisive statement as to, is cannabis legal on federal level and can we get in this? A lot of investment banks and broker-dealers, private equity capital firms are staying away from it until they get some kind of clarification on the federal level. But having said that, that doesn't mean that there isn't capital out there. There are some investment banks, there are some broker-dealers, a lot of them in Canada where it's federally legal in Canada. There's an established investment criteria of taking companies public in Canada and raising the capital for cannabis and for hemp. So we have a lot of that information, and we're going to be having a lot of experts on the show, in our succeeding shows, that are going to be talking about this. I've got deep contacts with investment banks, broker-dealers, and private equity capital that are interested in looking at deals. But we get back to the premise of this show, which is valuation. It's very important that you sit down with your advisors. And if you don't have an advisor, then you need to get an advisor. Now, I developed, along with a partner, John Dupuy, been a business partner. We've done a lot of deals over the last 20 years. We developed our own valuation software. It's called Value Wizard. And we do valuations. We have an intake form that we send to clients that has a series of information that a client fills out, documents they supply. We take that information, we put it through our algorithms. We have some proprietary algorithms that analyzes a business situation and then ultimately comes out with a valuation. Now, we did an evaluation for a client of ours that you've heard on our show, Elite Beverage International. They have a flagship product called Tequila Comisario. We did a valuation for them using our Value Wizard software and came up with a valuation of about $137 million. And that was last year. We're in the process of revising that, which should be almost double that at this point based on what they have. Now, in some valuation companies look only to certain elements that are tangible. How much cash do you have in the bank? What kind of intellectual property do you have? What are your sales? and maybe some real estate. And that's where they stop when it comes to doing a valuation for your business. What we do using our Value Wizard software to establish a valuation is we look at all those key elements that I just mentioned, but we also look at the intangible assets that you have. We have almost a 12-step program that you go through: potential sales, what's your installed base of sales, what kind of market share do you have, how superior is your product, what's the customer satisfaction, and it goes through all those algorithms to establish the valuation for your business. So you're not just pulling figures out of the air. You're not giving up too much of your company in the initial stages of raising capital for your business. Very important when it comes to doing a raise for cannabis, technology, almost any kind of business. Again, if you're buying and selling your company, doing mergers and acquisition, taking your company public, estate planning, you need to have a valuation for your business. And it's really critical that you have the proper valuation when you're raising capital for your business, because you're not just going to be raising a seed round. That's your initial money. You're going to have to do, once you do the seed, you need to do a Series A, a Series B, a Series C, and on, additional rounds of financing. You can never have too much money when it comes to operating your business and executing on your business plan. So there's always different series of financing that you're going to be going through, and evaluation will help you establish along the way how much equity you give up for that capital. And like I said, if you're a founder, you don't want to be doing different financings and find out that you've given away too much equity in the initial stages, and now you're down to maybe 5 or 10% equity ownership in the company as the founder, and you've given away 90% or 95% of your company to investors. That's a real good way of losing control of your business. You're listening to Business Pulse Talk Radio, the heartbeat of business. I'm your host, Michael Brette. We bring you this show every Tuesday, 10 a.m. Pacific time, here on OC Talk Radio. And again, Business Pulse is all about business all the time. We're going to be having, next week, I want you to tune in also, because next week we're going to have a client of mine called AbTech Technology. AbTech Corp. It's a small cap, publicly traded technology company in the fintech space, where they have mobile payment technology. They have several patents on technology space, and I'm going to have Robert Sanchez on here, who's the Chief Information Officer of AbTech, talking about their stock symbol is APCX. But they're going to be on our show next. They're going to be live in studio. We're going to be doing and filming for live streaming to YouTube as well. So very interesting company. They have established their valuations like I've been discussing in this show. So again, next week, AbTech will be on our show. Now, again, I want to emphasize the fact that we do have some white papers available, that if you email me at mikebrette@gmail.com, that's Mike Brette, BRETTE @gmail.com, I will email you the valuation formulas to establish the pre-money valuation, post-money valuation, and how you can figure out the percentage that you're going to be giving to an investor for X number of dollars in capital. And I'll also email you information on an investment group that we work with, that if you're trying to finance your cannabis, your hemp business, whether it's a grow facility, a lab, an extraction, B2B, or B2C, we can do up to $5 million. But again, you can't be a startup. You have to have established revenue, seasoned management, and an exit strategy. All that information will be in the email that I send to you. And it's very important. This information goes hand in hand. Valuations for your business, to raise capital, and sources of capital. Now, I get phone calls all the time from people and emails. They have a business plan, they have a pitch deck, and that's it. They don't know where to go to raise capital. Even though the SEC has, with the Jobs Act and passing crowdfunding and getting flexible on advertising and marketing your offerings, excuse me, People still don't know where to go to find investors. It's not a secret, but it takes a lot of work. And we can help you if you tune into our shows. If you contact me directly by email, I can walk you through that process. We do a lot of road shows for clients where the client will come and do a presentation, and we'll invite 15 to 25 investment bankers and broker-dealers, private capital firms to have a lunch and have a client make a presentation. Why? The client is looking for capital. The client is a small cap company. They're looking for support in the open market for their stock. It's getting out and networking. I know everybody likes to use social media marketing and email and kind of hide behind the scenes. You got to get out and meet people. You got to shake hands. You can only do so much over the internet and through email. And eventually, you got to talk to people face to face. People can read your business plan. They can read your private placement document. They can access SEC filings. They can get all the paper trail that they need. But investors want to know who they're dealing with. There's that trust element with the management of the company. So once you establish that, raising capital is not a guarantee, but it gets a lot easier when you're talking to investors face to face. Again, we're about wrapping up our show here today, but again, emphasizing in this show, the takeaway is valuations for your business, what the pre-money valuation is, the post-money valuation, and how much equity you're giving up to investors. Number 2, financing or raising capital for a cannabis company, a hemp company. We have access to that capital through some of our sources. We have white papers on a lot of this information we're talking about. So if you contact me, MikeBrette@gmail.com, I will email you the white papers, and you can also call me, and we can have a dialogue after the shows. We can have a meeting. We can help you access capital for whatever business you might have. Again, I want to thank you for tuning in today here on Business Pulse Talk Radio, the heartbeat of business. I'm your host, Michael Brette. Next week, tune into our show. We're going to have Robert Sanchez from Abtech Corp., small cap public company in the mobile payment sector, a fintech company, blockchain. And so it's a payment processing company. It's very interesting what this company has to do. Again, I want to thank you for tuning in today here at Business Pulse Talk Radio, and I'll see you on the radio next week. Thank you.
You've been listening to another edition of Business Pulse Radio, right here in Orange County's only community radio station, OCTalkRadio.net.